In this video, we will be discussing the ADX indicator and why it's one of the best indicators for algorithmic trading. Stick around to the end to learn how the ADX can massively improve your trading. This video is sponsored by Prosperity Algo and our free Golden Time Bomb Expert Advisor. Do you want to make 100+% annual returns through automating the London breakout and the opening range breakout? Then click the link in the description. So, the ADX indicator really tells you if the market is trending or if it's ranging. And here we can see with this beautiful diagram from Baby Pips that if you have an ADX below 20 or below 25, that would typically correspond to ranging price action. Whereas once the market starts to move, the ADX would be over a value of 25 to 50, and that usually indicates that something is going on in the market or there's some degree of movement. And the ADX is an absolute value indicator, so it doesn't tell you if the market is going up or down, it just tells you if the market is trending more generally. Let's move to the next slide here. And really what the ADX is super helpful for is it shows you what type of market regime you're in, be it either more of a trending market or a ranging market. And here just to define what a trending market would be, an uptrend you're typically seeing higher highs and higher lows and kind of the staircase going upward, whereas in a downtrend you're seeing lower highs and lower lows, whereas sideways you typically look for a range-bound market. So you can imagine like a support and resistance levels which are around the area of the range and prices effectively bouncing around a channel. So that's how you can define these different market regimes. And the reason why this is so important and why the ADX is so important is that different strategies really work differently in different market regimes. And this is particularly important if you're an algorithmic trader because you generally don't just trade one system. You trade a portfolio of bots. And the reason why filters like this can be super helpful is you can effectively use your more trend following or breakout bots during trending markets, whereas you can use more mean reverting style bots during more mean reverting conditions. And an indicator such as the ADX is a very effective filter to tell you when you can effectively turn certain bots in your portfolio on and kind of maybe allocate some money away from other bots in your portfolio. Just to kind of break down some of the most common different strategies which we see which work well in trend following and mean reverting markets. We can start with the trend following side of things, and like breakout systems, they love trend following conditions or trending market environments. So let's say for instance that classic breakout system is you'd place pending orders at a range, be it like the opening range or perhaps at a local minima and maxima level indicating a support and resistance level. A breakout system would do really well in the trend following market just because once price breaks, it will usually keep going. Whereas if you were in more of a price channel, it might actually reverse. And another good type of system which works well here are like the really high risk reward trend following strategies. Like the EMA crossover is the perfect example of this, where you're looking to catch like this long movement after like a level is broken. Those work well in trending markets. Mean reverting markets, obviously as the name would suggest, mean reversion strategies work great here. So here if you have a price channel and price is oscillating between a high and a low, if you were to hit the high level, that would be the perfect place to short. And inversely, if you hit the bottom level, that would be the perfect place to buy. And yes, obviously this works great in channeling markets. And moreover, night scalping is like a subsection of mean reversion, which I find to be particularly effective because you're essentially trading mean reversion strategies during the most mean reverting time of the day when price is not usually trending. So these strategies lend themselves really well more to like channeling or ranging markets. And the final view here is like options. So I am not an options trader, but I know some people like to trade iron condors or butterflies and various techniques that tend to do well when price is ranging. And as gold, you can trade a whole variety of different securities on it, apart from Forex in terms of like options or futures options. You can actually capitalize on these strategies if you're more of a swing or longer term trader. Okay, now diving a bit into the actual calculations behind the ADX. It's a big, pretty complex multi-step calculation here, but really it breaks down into, to get the ADX, you first need to calculate the positive directional index or the negative directional index. And you have likely seen these two lines on your indicator as well. If you calculate the positive directional index, effectively what this is, to speak in high-level terms, is you look at changes between the current highs and previous highs to get the positive directional movement, and then you smooth this out, and you're taking like a rolling average of it over the ATR. And then at the same time, you're also looking at the negative directional movement to calculate the negative directional index. But this is effectively, you're looking at the changes between the previous lows, and then you're smoothing it out, and you're also factoring in the ATR. And after all of these calculations, you get to a value, which is an absolute value, which tells you if the market is trending or not. But I find a very clear way of actually understanding how this works is to look at a spreadsheet, because there's a lot of calculation, a lot of different variables. Like, to be able to get a really clear picture, I like to look at it like a spreadsheet, and that just makes way more sense to me. And here effectively you can see that you take your high-low close values in your true range, and you first calculate your directional movement, your positive or your negative ones. And essentially, like, if the highs got higher, you say, yes, there's a positive directional movement. If the lows got lower, you would then look here at the negative directional movement. But effectively, you're kind of like keeping a tally as to if there's a change between the highs and if there's a change between the lows. And then from there, you're able to essentially track to see what the magnitude of the movement is. And then from this, you kind of like apply a variety of operations to it. You get the true range, you calculate the positive directional movement, and you get the positive directional index and the negative directional index here. And then you apply various like smoothing and averaging factors to it. And then you finally get the ADX. So if you really want to understand this, just like find some sort of spreadsheet somewhere which breaks this down, especially if you can like flip through the equations and like do F2. And that's probably the best way to kind of understand the calculations. But as a trader, it's probably more relevant to know what it's telling you. It's more just for personal curiosity. It's good to understand how it's actually calculated. But really what the ADX tells you is that if, and this is the Investopedia definition, if the values are below 20 or 25, the market is ranging. If the values are over between like, let's say 25 and 50, the market is in like a slight trending phase. And if it's over 50, you are likely in a very, very powerful trending phase, maybe after a news event, for instance. And the reason why this is so powerful is it makes for a fantastic filter. And I also find it's a very robust filter relative to other indicators. And there's a few reasons behind that, but really, like, the ADX uses a large range. So you're not saying, hey, when the RSI hits 30, buy. You're saying, oh no, when you're over 25 to 100, you might be in a slightly more trending condition. And because you're using such a large range as opposed to like a fixed value, I find it's a very effective filter, which is quite robust because there's a big margin of error within such large ranges. Moreover, the fact that it's bidirectional also leaves less room for over-optimization, because if it works in both longs and shorts, that's probably a good sign. And it's not like you're having to pick a negative or a positive slope value. If you have to use the same value for both positive and negative trades, so longs and shorts, you're more likely to have a robust system. I also find that, kind of to my earlier point, it's super great for algo trading systems, just because the element of if a market is ranging or trending will enormously dictate what systems work when. So really, to wrap up this video, the ADX is a fantastic filter. It's one of the most robust filters out there, super powerful, and yeah, just great for algo trading systems and for more portfolio management in general. Hope you guys enjoyed the video, and subscribe for more videos like this.